Well, hello everyone. Welcome to Tuesday Trucker Talk. I'm Trucker Todd, and it's time for my actually favorite show of the month we do. We're going to have Trucker CFO on tonight, and I'm really excited to ask him some questions. You guys know a couple of weeks ago I mentioned that he put a PDF out on the website, and I've printed that PDF out, and we're going to ask him a bunch of questions about that tonight. And so I'm looking forward to that. We always get a lot of great information out of him. And you guys know I've had a great experience with them so far since I joined them on January 1st. But now I'm starting to hear from some of you guys too. And so that's always great to hear when you guys have a similar experience to what I've had. Before we bring him on, let's do the normal stuff. I'm going to go ahead and go through the fuel surcharge, and we'll talk about the load board real quick. Just take a second, and then we'll get him up. So the national average of fuel this week dropped from 437.6 down to 429.4. So it's continuing to go down. And I looked from a month ago when I had Trucker CFO on last, and it looked like it had dropped about 40 cents ballpark, maybe a cent or two the other way, but roughly 40 cents. So fuel's on the down. Unfortunately, rates don't seem to be coming up to benefit everybody. Anyway, what that did to the Swift fuel surcharge is last week it was 52 cents. This week it dropped to 50.5 cents per mile. And the West Coast fuel surcharge remained the same at 9 cents. Now, load board, we didn't have a meeting last week, and we were supposed to have a video call this week today. That call did not happen, so we're hoping to have it tomorrow. They said they rescheduled it for tomorrow. But in the ticker, before we bring Trucker CFO on, my email is there. The fuel surcharge information is there. But most importantly, his information's there. Give his company a call. The phone number's there. The website's there. Go to the website and pull up that PDF that we're about to go over here in a minute, and then you can follow along with us. We're going to ask him a lot of questions as well as get to some of your questions in the comments as well. And for those of you saying hi to me and stuff, I will get back to you. But I want to maximize our time with him because he's really got a lot of great information. And this packet here is really good. My wife printed it out for me because I kind of had a crazy week. But what it is it's a 2023 tax season guide that kind of gets you ready for 2023 taxes. But before we jump into it, let's bring Trucker CFO in. Hey, Colton, how's it going?
Hey, Todd, great to be here. Thanks for having me.
Yes, sir. Also, he's on Dave Nemo's show, and he does a lot of, he's got a podcast, and you can find those things on his website too. You guys go check them out as well. They're really good, and I think you'll get a lot of valuable information there. And like I said, we're going to come back and get some of your guys' questions here in just a minute. The first few pages are kind of talking about developing a plan as far as if you want one truck or if you're looking to start a fleet. And so it kind of talks about being prepared and getting set up. But I want to get into some of the other stuff, and I got my pages confused here. But before we do, is there anything you wanted to discuss or anything new that's going on that we need to be aware of?
Well, so you mentioned Radio Nemo. Yeah, I was actually on Radio Nemo this morning. I'm on every Tuesday at 9:30. What is it? 9:30 Central, 8:30 Mountain. And I was on. The show is actually with Michael Burns, so he's one of the founding partners of Radio Nemo with Dave Nemo himself. And so he and I do a segment each week. We repost that to our website. And there's a lot of good information. It's always fun going on with them. If you haven't checked out Radio Nemo or haven't listened before, they've got a lot of great programs other than just mine, and ours, and are always bringing on good guests that share pertinent information to your life as a trucker, your life as independent contractors, owner operators, whatever it is you might be doing. They're sharing some good information. So check that out. in terms of new information, boy, we're February 28th. As tax preparers, we look at tax season in kind of a few different segments. We have the early filers, which are getting their taxes done as quickly as they can. Generally, those happen in the month of February. So we've been busy getting taxes done for those early filers. Then we have the timely filers. Those are the folks that are going to get it filed by the deadline. That's usually going to happen, depending on your entity, anywhere from March 15th to April 15th. Of course, this year it's April 18th. And then we have the procrastinators, or it's not always procrastinating, but the folks that file extensions. A lot of times those extensions are necessary based on what's going on, but a lot of times it's just procrastination, right? And we get those done about 6 months later. And then we have the folks that just the non-filers, those that don't do it. And so those are kind of the four areas. And we're already through segment one. We've got the early filers all done, and we're staying busy. It's our office. Our days are hopping. I did not have a spare moment today, and that's pretty much the way it is within the office for the rest of us. It's a busy time of year.
That's a great question because I can think in years past where I've had trouble getting 1099s from certain companies. What do you recommend if a company's dragging their feet given a W-2 or a 1099 or things like that?
Well, it's a good question. You have to file those 1099s and those W-2s with your tax return. And if you just can't get it, um, there are ways to go about it. You still need to claim the income. Just because somebody doesn't give you a 1099 doesn't mean you don't need to report it. It does, even if it's below that $600 threshold. A lot of people think, oh, I didn't make over $600. I don't need to claim it. That's actually not true. Any dollar you make for whatever reason is potentially taxable, and so you need to claim that. So especially on the 1099 side, because more and more motor carriers are not issuing 1099s, and that's okay. There's actually laws that deal with the transportation industry that allow them to not issue a 1099. So for those that do, it's a benefit. It kind of helps you in reconciling what your income is. But for those that don't be surprised. It just may be that they don't issue a 1099. On the W-2 side, that's a different story. If you're not getting a W-2 from an employer, it's much more difficult. You should probably take your last paycheck. If they've gone out of business or they just refuse to give it to you, take your last paycheck and use that, or the tax preparer can use that. But if it's just a matter of being late and you haven't gotten it yet, or you haven't gotten home to get it out of the mail, do not file your tax return until you get those tax documents.
Okay, let's jump into this PDF. I really enjoyed it. Actually starts with one of my favorite sections in it, the 6 mistakes that I want to word it right. 6 common mistakes made by trucking professionals. And the first one's one that I would have never even thought of, filing W-2s and 1099s separately. How does that happen? Do they do 2 returns?
Yeah, it happens a lot. You would be surprised how often we start working with somebody, and we're like, okay, they sign up. We're doing their in this case, 2022 taxes, and we start asking them about their personal information, their W-2s, maybe their mortgage interest, retirement account distributions. They're like, you don't need that stuff. I already filed that return. It doesn't work that way. When you are self-employed, even if you have an S corporation or a partnership, if you have a pass-through entity, that information by definition passes through from the business and is reported on your personal tax return. So although you may have separate taxes, so to speak, for your business, it doesn't mean that you can file them individually. You've got to file them in conjunction one with the other, because for most of those pass-through entities, in fact, for anything other than a C corporation, that information passes through to you as an individual, and that is where you pay tax at the individual level. There's oftentimes no tax. Some of the states, like a partnership or S corporation, might have some related state taxes. It could be like state of Texas. You have franchise tax. There are other, California has a franchise tax. I think a lot of people might be familiar with this. What is it? The $750 franchise fee you got to pay in California. So you may have those taxes or franchise taxes that you have to pay, but at the federal level, it all passes through to you as an individual, and that's where your tax liability is calculated. So this mistake is identifying that and making sure people understand. Don't go file your personal taxes until you've talked to somebody and had them look at your business situation as well.
Okay, that makes a lot of sense. I had one more question regarding that. As far as when you're doing this, should you be filing separately with your wife, or is it better to file as together?
Uh, there are very few situations that it is better to file separately than it is to file jointly from a tax perspective. Now, I get it. There are situations where people have things going on. It could be marital issues, it could be debts that people don't want to associate their spouses with. There are those types of situations. But in terms of actual tax, it is very rare that you will pay less tax by filing separate than you will by filing joint. And so we'll evaluate that. We have had situations come up where we've looked at it, and there have been certain things, certain situations that have created a something with the tax that resulted in less tax by filing separately. But most of the time, in fact, I had an example of a tax return I just prepared for a gentleman. He's got an S corporation, had filed separately for a number of years, and I just asked him, "Why do you do that?" And he says, "I don't know. It's just what I've always done." Well, has nobody ever consulted you that you should do it different? And the answer was no. And so we talked about that, and it cut his tax liability in half. It cut it from about $11,000 down to just over five,
Wow, that's
by
a big
filing,
difference.
yeah, by filing joint. So now everybody's situation is different, right? Just because it happened for that person doesn't mean that everybody's going to save $5,000, but it's generally going to save you some level of money by filing joint.
Okay, again, we're on with Trucker CFO answering your tax questions. Those of you that have questions and are putting them in the comments, we'll circle around to those. And those that are saying hi to me, I'll circle around to you too. But we want to take advantage of this opportunity to answer as many things as we can while we've got him on the air. Number two, and I imagine this happens a lot because when people first start, being self-employed, that's they hear immediately you need to get an S corp, you need to get a C corp, and mistake number two is making those elections too soon.
Yeah. And before I talk about that, I just want to call out Kathleen Lowther. Many of you might see her in the comments section, making comments, answering questions. She's actually one of our Trucker CFO representatives. We got her on answering questions as we go through. So if you see answers from her, trust that it's coming from the Trucker CFO team. But in terms of this mistake, making C corp and S corp elections too soon, we do see it often. I think the one that causes a lot of problems is the C corp, because of the reason for that is the C corp. You have what's called dual taxation or double taxation. Okay, because the C corporation itself, the IRS represents as a taxable entity. That means that when you do a C corporation's taxes, it generates a tax liability for that entity itself. And you have to pay taxes at that entity level. And then any money you take out of the C corporation, whether it be through, you can take it as distribution. They're not actually distributions, they're dividends from C corporations. So if you take it as a dividend or you take it as a paycheck, you then are taxed at a personal level as well. And so there are very few circumstances where we want to see somebody with a C corp. If you have set up a C corp, then what we generally want to do is elect for you to file as an S corporation. And depending on when that happens or what's going on with your business, we may do it right away. We may wait a little bit. But if you're setting up your entity on your own, do not make a C corp election. For tax purposes, it definitely causes a lot of issues. Now, there may be legal situations going on, and an attorney has consulted you to set up a C corp because of those reasons. We are talking solely about the tax impact, right? I'm not an attorney. I'm not giving you legal advice. Everything we say is about the tax side of things. So Just keep that in mind. But from a tax perspective, C Corp is definitely not usually the route to go. And then on the S corporation, the thing that people need to remember about S corporations is that there are additional responsibilities that come with being an S corporation. So if you're a solo driver, a single member LLC, you can make the S corporation election, but you then have the responsibility of taking a reasonable salary. You have to take reasonable compensation, is the term that the IRS uses. And if you don't, you run the risk of the IRS reclassifying your business out of S corporation status, and you will then be stuck with the back taxes that you avoided by that S corporation status, and you don't want that to happen. The reasonable compensation is something that the IRS is really starting to crack down on. So if you are an S corporation and you are not currently taking a paycheck out of your company at a reasonable level, and reasonable is in the eye of the beholder, it's different for everybody, but I would say at a minimum probably $35,000, and we need to evaluate that for your situation to really be able to determine what it should be. But if you're not doing that at a minimum, then you likely are going to experience what's called a reasonable compensation audits, and you could likely have your S corporation status revoked. So get with us, we can get you set up on payroll. And couple other things about the S corporation and reasons why people do it too soon is when you make that election, there is a change in the way your per diem is paid out. So for most drivers, they're used to the process of counting their days up, out on the road, and then the tax preparer multiplies that by the daily rate, which now is $69 a day, and that shows up on the tax return as a deduction. Right. And in some, if you're out 320 days a year, that can be a close to a $20,000 deduction for you. When you become an S corporation, you no longer take the per diem that way. It does not come by counting your days on the road and taking it through the tax return. You're now an employee of the business. And so for those of you that have been company drivers and have participated in a per diem plan where the motor carrier paid you perhaps a mileage rate for per diem, so they're splitting your pay between actual mileage pay and per diem pay, you need to do that exact same thing for your S corporation. And there's different ways you can do that. You can do it by the mile. You can just set up an amount that's going to average to the number of days you're out on the roads. We do it a number of different ways for clients. But you're going to take it as a part of your paycheck, not as a part of your tax return. Also, for medical insurance, as a Schedule C, sole proprietor, single member LLC, you're taking that medical insurance deduction as a deduction to self-employment tax on your Schedule C. When you're an S corporation, you can no longer do that either. You don't have a Schedule C. And as a 2% or greater owner of the S corporation, you cannot take the medical insurance deduction as an expense. You have to then run it again through your payroll as part of your reasonable compensation. So those are some of the differences, and there are fees that come with a lot of that. There's a fee for payroll that you've got to contemplate in. If you're filing on a Schedule C, you're going to have an extra tax return that becomes a fee, and then you're going to have payroll taxes associated with the amount that you're paying yourself. Keeping in mind, while doing all of that, you're also saving on the self-employment tax that, if you're making enough money, is going to save you overall. And these are all things that we want to work with our clients on to understand. Todd, I know we're working with you on the same exact issues. It's something we want to have conversations about. Don't just listen to me here on the show and go and try and do it on your own, or go and try and have somebody who doesn't understand trucking do it for you. You want somebody that understands that. You want to give us a call so that we can talk about your specific situation.
Also, Twisted D, I know we was going to wait on some of the questions. You kind of answered it there. Does having an LLC help make doing taxes easier? Also, having a business account help make taxes easier? I think it's a complicated deal, and that's why you need Trucker CFO no matter what you do.
So real quick, I was just told Christian Harlow, yes, you need to file all W-2s and 1099s together. So I think that goes back to what we said earlier on one of the other mistakes. You need to file your taxes together. If you have 1099s and W-2s, You are not filing separate tax returns for you might have separate tax returns. You might have a business return that the W-2 or that the 1099s go on, and your W-2s go on the personal, but you've got to file that business return first, because that income flows through or passes through to your personal return, and that's where you pay taxes. So the answer to that is yes. And then Todd, on the other questions, does it make it easier if you're an LLC? Frankly, having an LLC in and of itself does not change the way you are taxed. The IRS does not recognize LLCs as a specific type of tax classification. And so if you're a solo driver, or even if you're a team driver, but you have a single member LLC, your taxes are going to be filed on a Schedule C. That is exactly how your taxes are filed if you are a sole proprietor without an LLC. So your taxes remain the same. If you're a multi-member LLC, you file your taxes as a partnership, which is different. So that could be one thing there, and that does make it more complicated. But the thing it does that we want people to have LLCs for is it sets us up to make future changes to the way you're taxed. We take a very proactive approach to the way we work with folks. If you're running as a sole proprietor and you get to the point where you're making enough money that we could possibly make elections to save you money because of the tax law, but you don't have an LLC, we're out of luck. We can't do it. So you've got to get that LLC set up first. So why not have it in place now? And that way, we've just got all our ducks in a row when it comes time to make those elections at the appropriate time. And so going back to that last question, making C Corp and S Corp elections too soon, really what we're saying there is folks do it without consulting and getting proper advice. We want to talk to you before you set up a C Corp or an S Corporation and make sure you understand what the consequences are and make sure that it's, in our opinion, a good direction for you to go.
Here's another one before we jump back into the report. Are there any tax implications of paying for business expenses with a cashback credit card, then paying that balance with a business checking account?
So I'm just reading the question here. So are the tax of paying for business expenses with a cashback credit card, then paying that balance? Okay, so if the credit card is in your personal name, either way, on that cash back, you're going to receive some type of tax document from the credit card company. But really what you're doing there is you are reducing the amount of your expense. So if you write off, say, $100 expense and you've got a 2% cash back card, that expense was not actually $100, it was $98. And so the money, the cash that you receive back, depending on who the technical owner of that card is, will have different tax consequences. If it's in the business's name, it should go as a reduction of expense. If it's in your personal name, there's going to be additional tax documents that are coming from the credit card company.
Okay, let's go into, and I think we're seeing this here. Let's go back into the report. Mistake number 3, not using the best tax service for truck drivers. And we see this a lot with people going to big box places that just don't have a clue about the intricacies of trucking taxes.
Yeah, definitely. You see the flag waving tax preparers out on Main Street USA, right? Most of those folks, they've been through a few weeks of training. They go through a type of education at the various tax preparation company. They're usually franchises, and those are great for certain situations. It's fine if you've got a very basic tax situation. But some of them even have higher level services that you can pay for, where they've got more advanced tax preparers, maybe even CPAs. The issue is that as a tax preparer, I mean, geez, the tax code is tens of thousands of pages long. Okay. There is no way I, as a CPA, could know and be an expert at all 30, 40,000 pages of IRS code. It's just not going to happen unless I was a savant and could read it and just retain everything I read. It's not going to happen. And so the vast majority of your tax preparers out there are going to specialize in certain areas of tax codes. And there are general practitioners as well. It's very much like the medical world, right? You've got your general practitioner doctor who's just like a family doctor, just kind of knows general things. But when something comes up, they're going to pass you off to a specialist. And you folks all need to understand that you're in a special situation. You need to use somebody who understands your industry, understands the specifics of what's going on within your business. I'm not out there doing taxes for doctors and attorneys. I don't know their business. We will do other things related to our trucker clients, and we do things that we see often with our trucker clients. As an example, we do quite a few Schedule Fs related to farming activities. And we're familiar with that. But if it gets overly complex on the farming side, we're going to pass it off to a specialist. So same thing with the trucking. You've got to know where your niche is, and our niche is trucking. Now, within that niche, you want to make sure that you've got somebody that's not going to treat you like a number. You got to make sure you've got somebody who is going to give you the best service, do it as quickly and as efficiently as possible while treating you like a person and not a number. And that's where we see folks, companies out there that they may know trucking, they've been doing it a long time, like us, but because of their size, they're not giving the best customer service. Oftentimes you're calling in and it's going to take 6 to 12 months to get a tax return done. And that's not going to be the case with us. We're going to get you done. We're going to treat you like a person, and we're going to make sure you get the best tax return prepared, the most accurate tax return. And I think that's an important statement too. I hear all the time about people saying, I never pay taxes. I never pay taxes. I don't have to. I've got an accountant and I don't know what he does, but I never have to pay taxes. And my question to them is, well, are you making money? And if the answer is, yeah, I'm making money, then more than likely there's some funny business going on that could end up hurting that person down the road. If you're making money, more than likely at certain points in time, you're going to owe tax. It's just the way it is. Unless you're buying a new truck every single year and fully depreciating that truck and growing a small fleet, you're not going to get depreciation, accelerated depreciation every year, right? So we're going to do it accurately. We're going to make sure you take every deduction possible and that you pay as little tax as possible based on the tax law, right? We're going to make sure you don't get yourself into a situation where the IRS comes knocking and you end up with penalties and interest that you shouldn't or didn't need to have. And so just because somebody tells you you don't have to pay taxes doesn't mean it's right.
That's one thing, and people know that's been watching my channel. I had ATBS before you guys, and it was a nightmare trying to get people on the phone, trying to get advice. You'd get two different people on the phone, get two different answers. And every time I call you guys, I usually get an answer right then, but if not, they're really good about calling me back. And so that's another part of bigger's not always better. You know, you may work at a company where they go, get ATBS, but you really need to take a look at Trucker CFO because they've gave me a ton of great advice in the short 2 months that I've been dealing with them, and I'm making a lot of changes as a result of the information they gave. And before we go to number 4, I want to bring up a comment here. Uh, Oops, that wasn't the one I wanted to bring up. Somebody wanted to know about how much per diem is right now, and I
Per
gotta find.
diem, yeah, per diem for owner operators, independent contractors is $69 a day. That's the amount you can take. If you're filing on a Schedule C, that's the amount that you're going to take. And again, if you're an S corporation, there's some different things that we need to do there, and you need to run that through part of your reasonable compensation process. So $69 a day. That increased last year. With inflation, we may see another increase. Don't know for sure, but it's possible. And then as far as the per diem, it's important to understand that for days that you leave and return home, you're going to get 75% of that. So you need to track your days separately and don't just count them. Make sure you understand when you're leaving, when you're going, or when you're leaving and when you're coming, and then the days that you're out. So I always recommend to folks that they use their ELD to help with that process. There are some apps out there, that's fine as well. But when it comes to being audited, the app is not going to suffice. The app is great for just doing the calculation. When you're audited, you've got to provide backup that proves that you were on the road away from home. And the best way to do that is to download out of your ELD the reports that show the trips, where you've been, where they're going. Most ELDs are keeping that information for at a minimum 6 months. Some are going out to 2 years or more. But just make sure you figure that out. Call the ELD company, get in touch with your motor carrier, find something out. But keep those records as part of your backup for at least 3 years.
Okay, that was what I was going to ask. 3 years on your logs, keep them. Okay, let's see here. At what income level does it make sense to switch from an LLC to a S or C corp?
Okay, so let's get the C corp right out of the way. There's no income level that we want you switching to a C corp. It just doesn't make sense. One time in 1,000, it might make sense for us to talk about you becoming a C corp or setting up a C corp. So, just kind of throw that out. On the S corporation, generally, we're going to take a look at that at $70,000 net. So after your expenses, if you're making $70,000 or more, it's usually going to be a benefit for you to make this S corp election. It may be that it's beneficial to do it under that level. You may have certain things going on, and we'll talk about that. But once you make the S corp election, it's important to understand this isn't something that you just flip flop back and forth between S corp and standard LLC. Once you make the S corp election, you are an S corporation until you either elect to not be or the IRS forces you to not be. If you elect to not be, you can then not re-elect S corporation status for 5 years. All right, so it's not something you want to just do and undo. And if the IRS comes to you and says, hey, you weren't following the rules of S corporation status, it's possible you would not be allowed to re-elect S corporation status. But to answer the question, that $70,000 mark after all of your expenses is kind of where we start having those conversations.
Okay, here's one more before I know I'm wanting to get to number 4 and keep going, but we got another good one here. I don't know if you can answer this or if this is a legal question. He heard that LLCs also protect you legally as a business instead of you personally as a sole proprietor.
Yeah, so I'm not an attorney. I'm not giving legal advice. There are definite legal protections that come from an LLC. If you're interested in those legal protections, you should consult with an attorney. But if you have, if you've got a home and you've got vehicles or, guns or bullion or, other assets that have value, you really should be looking into an LLC or some other type of business legal entity and understand what those protections are so that in the event of an accident or some other suit, you're not ending up in a situation where those personal assets are at risk. And as a sole proprietor, those personal assets are at risk.
Okay, let's go to number 4. Sorry I drag it out so long. Mistake number 4, taking a mileage deduction incorrectly.
Sorry, I'm trying to multitask here. Sorry about that, Todd. I saw a question here. Just ELD, email it to accounting firm for per diem. How often should it be sent? You don't actually need to send us the ELD downloads. That's not something we need. We can do our part with just the number of days on the road. What I'm saying is if you are audited, the IRS will request that you provide proof of the number of days that you were on the road, and that ELD download can be a great tool to do that. So with that, will you ask me your question again?
Number 4 was taking a mileage deduction incorrectly.
Okay, yeah, we see this a lot. It kind of comes back to some of what we talked about before, but as a truck driver, think about like rideshare, right? Those folks are out there, they're doing the rideshare thing. They're going to get a per mile deduction for however many miles they drove out on the road hauling people from A to B. As a truck driver, you do not take a mileage deduction. You are going to take actual expenses. You're going to take fuel, insurance, repairs, maintenance. All of those expenses associated with your truck are going to become a deduction. Now, the rideshare folks and others who do take a mileage deduction, they have the option of doing either or. And sometimes it might make sense for them, but the mileage rate, I think it's 57 and a half. I might be off on that, but I think it's 57 and a half cents per mile right now. Generally, it's going to be much better for those folks to take the mileage deduction. But for truckers, your vehicle does not actually qualify for mileage deduction. And so a mistake that we see folks make on tax returns that don't know the trucking industry, is they'll say, oh, how many miles did you drive? 135,000 miles this year, right? And they'll give you a mileage deduction for the 135,000 miles you drove, and that's just incorrect. So make sure that if you do got somebody doing your taxes that doesn't know trucking, they're not giving you a mileage deduction. That's a very quick and clear way to know that you've got somebody who doesn't know what they're doing.
I bet this happens a lot, and probably a big headache when it does. Mistake number 5, operating without a partnership agreement. And it talks about team drivers in that deal.
Yeah, we see this a lot with folks that they'll team up. So this is a situation where it's not husband, wife. They'll team up with a brother or a friend or cousin, just somebody else who's not related to them in a tax sense. And the motor carrier is perhaps paying one of the drivers, and then that driver is paying their team driver. You want to make sure that if you're in a team situation, that you set up an LLC, most likely set up an LLC, and by nature, you will then automatically be classified as a partnership, and you want to have that motor carrier pay the partnership, that the LLC, into a business bank account, and that you then are splitting the money that comes through that partnership. If you're driving the same amount of miles, it becomes pretty easy. If there are differences and one of you is owed more money than the other, that's okay. There are ways to figure that out. But you want a partnership agreement, because it becomes very potentially very problematic when you have these situations of team drivers in the same truck, either both being paid by the motor carrier or somehow it's getting split. It can cause a lot of tax situations that you want to avoid.
Okay. Yeah, I see Manny's question. It's not really pertaining to our guest. I will circle back and take care of that later in the show about Swift's policy on hiring in blue states and stuff like that. I'll come back around. I did see it, and I will circle back around and get that. Number 6, something we're all guilty of: listening to truck stop accountants.
Yeah. Oh man, we've got so many stories of people calling up and, I heard so and so at the pump tell me this or that, and gosh, I guess what I'd say about this is, the folks that you're hearing talk in the driver lounge or at the pump or in the showers, whatever the case may be, they more than likely don't know what they're talking about. It just flat out, they don't know what they're talking about. It just doesn't. It's not very good advice to receive when somebody that's not an accountant is trying to give you accounting advice, or tax advice. And so, if you hear something, my recommendation is call us up and we'll set you straight. I'm not saying it's always wrong, because you get, folks out there, you definitely know some stuff, but I guess the most important thing is don't rely on that advice. Just because you heard it somewhere in the trucking world doesn't mean that you should rely on it. You want to give us a call and make sure that you're not putting yourself at risk with the IRS or your state tax agency.
Okay, the next couple of pages go into, is it deductible or is it not deductible? That's something you guys have helped me a lot with. I've talked to my person I deal with there several times about things and what's allowed and what's not, and I'm sure that's an area you guys get a lot of questions as well.
It is the easiest way to answer this question, as a starting point, is to ask yourself if it's ordinary and necessary to your business. That is what the IRS will ask. Is it ordinary and necessary? It's the exact language they use. So is it ordinary? Well, let's talk trucking. Is fuel an ordinary expense for a trucker? Well, absolutely. Is it necessary? Well, unless you own a Tesla truck, I guess it is absolutely necessary. Um, So ordinary, necessary, yes. I feel like maybe we talked or touched on this when I was on last month, but I used the example of your pet Chihuahua, right? Is your dog an ordinary and necessary expense to your trucking operation? People will try and claim that it's security. Maybe, probably not. I know there are accounting firms out there that will allow you to deduct it. Here's my point on the whole topic. That pet Chihuahua might cost you, even if it's a bigger dog, let's call it a lab, right? That lab might cost you $1,000, $1,200 a year in food. That $1,000 to $1,200 deduction is going to get you a tax savings of maybe $100, if that. Okay. Is it worth it to you to save that $100 in tax while opening yourself up to potential scrutiny on the part of the IRS? Because we have examples of folks through audits that have had their pet dog and the costs associated with the pet disallowed by the IRS, and it raised a red flag upon the issuance of the tax return that was prepared by other tax preparers. So our recommendation is to avoid expenses like that. It's all about, it's much like insurance, right? There are a lot of black and white issues when it comes to taxes, but there's a lot of gray. And so when it comes to those gray areas, it's all about risk mitigation. Is it worth what you're trying to accomplish? Is it worth the savings you're going to get by taking that particular deduction? And are you willing to open yourself up to that IRS scrutiny? Another one that we talk about often is the home office deduction. A home office deduction, is it ordinary and necessary? Yeah, I mean, for a lot of folks it is. You need a place from which to be able to manage your business, to do the paperwork, the back office side of your business. However, the IRS says that a home office has to be used regularly and exclusively in the operation of your business. Well, if you're an over-the-road trucker out on the road for 320 days a year, well, you're definitely not meeting the regularly aspect of a home office. And the other side of this is exclusively. So if you've got folks at home, spouse, kids, whatever, it's more than likely that the folks at home are going into that quote unquote home office and using the computer, or perhaps it's part of your kitchen or a bedroom, whatever the case may be. And so it's very difficult to maintain the exclusively part side of that equation. And so and with that home office deduction, same thing. You might get $100 benefit in terms of tax by taking that deduction. Is it worth it? And you also want to make sure you're not jeopardizing your per diem deduction, because that is something that can happen, and we have seen happen by folks that have taken the home office deduction. It then calls into question the per diem deduction and whether that's allowable. So you want to try and avoid those situations. When it comes to what is deductible, is it ordinary and necessary? It might be ordinary for truckers to buy certain things because everybody out there is doing it, but it may not be necessary to the business. And what may be necessary to one person is not necessary to another. If you've got a day cab, there's no way you can justify writing off a new mattress for your sleeper, right? It's not necessary. It's not going to be ordinary in your situation. So there's just those types of things that you've got to consider, and while weighing the risk of the different deductions that you're taking.
Here's something you guys have helped me a lot with, and you personally have spent quite a bit of time on the phone with me, giving me advice: choosing a business entity.
Yeah, so we've talked a lot so far today about business entity. Just what we recommend is that as you get into this business, if you become an independent contractor or owner operator, you absolutely need to set up an LLC. We do business entity setups. We've got a system in place that allows for folks to get that done in any of the 50 states. I say any of the 50. I don't think I've ever done a Hawaii or Alaska. Don't deal with a lot of truckers in those two states, but any of the other states I've done personally. And we also can provide registered agent services for each of those states. A lot of folks, if they do their home state, will become their own registered agent. But if you're away from home, There are very time-sensitive documents that can be sent by the state that you need somebody to get. And when it comes to those types of documents, as the registered agent, they come to us and we can pass those along to you instead of you needing to get to your mail. So just keep that in mind. We recommend it for everybody. If folks are wanting to set up a business entity, like I say, most of the time it's an LLC, give us a call. Check us out at Trucker CFO. I saw a question real quick about this particular document we're going over. Where is the PDF? Just go to truckercfo.com, truckercfo.com, and right on our homepage is a download link. Put it in. We do ask for some information, your email address and phone number. We're not going to spam you, I promise. You can slam Todd in his next show if we start spamming you. But we will hit you with some of our marketing materials from time to time, which is mainly good information that you're going to want and need, such as this PDF that we're talking about now.
A question that I got out of reading this report too, renewing your LLC, is that something you guys can help us do, or do we take care of that on our own, or what do you do when it comes time to renew it?
So all 50 states have their own laws when it comes to the legalities of LLCs. Some states require an annual renewal. Example, state of Utah, you have to go online every year and pay a renewal fee to keep that LLC or business entity active. Other states, such as Texas, you have the franchise tax. And so part of your annual tax filing is the Texas franchise tax that is going to the comptroller of the state of Texas and is keeping that entity in good standing with the state of Texas. California, very similar thing. You've got to pay that $750 franchise tax and file that in order for your LLC to stay active. Florida is an example of a state that requires an annual report. So you just simply log into their system. I think for Florida, it's sunbiz.com, sunbiz.org. I can't remember if it's .com, .org, .gov. I can't remember which. In fact, it's not .gov. I know that, which is kind of weird. It's not a .gov for the state, but you log into their system and you file an annual report for your LLC. So the different states have different ways of doing it. Some states don't require much of anything. If you're an LLC out of the state of Ohio, there's no report you really need to file. You may be required, depending on your business entity, to file a specific type of tax return, but it has nothing to do with renewing or keeping your LLC in good standing. So it's best to just make sure you understand the rules of your particular state. And if you don't know, you can give us a call there as well.
There's a small section in here that talks about raising capital if you want to expand your business. And I don't know if you want to touch on that or not, but I did see a section in that. And I've never wanted to have more than one truck, so I kind of skipped through that kind of quickly, but I know that's important to a lot of people.
Yeah, so if you are a sole proprietor and you don't have a business entity and you think about the prospects of raising capital being cash, if you're an individual and you're receiving some type of cash for that purpose, it can become taxable to you. And so you want to avoid that. You don't want to have to pay taxes on the cash you're receiving to potentially operate your business. And so by setting up an LLC, if you're receiving that type of cash, if you're whether it be a contribution to the business from yourself or from others to raise that type of capital, it's not going to be taxable at that point. And that's what you want. You want to be able to use all of that for purposes of growing and managing the business.
So I've got a good one for you. I talked to this guy on the phone and asked him to bring it up tonight. He's wanting to use his LLC. He's been a real estate agent and he's getting into trucking. And he wants to know if he can use his current LLC that he has for real estate and do a DBA or how that would work.
So when you file taxes as a business entity, you have to put in a specific code that the IRS recognizes that distinguishes what industry you are in. For trucking, usually that code we use is, God, I'm so used to 10 key, 484-120. Is that right? Yeah, 484-120 is the code for long haul over the road truckers. And real estate has nothing to do with trucking. So if you are actively using that real estate business, you should not then include an actively operating trucking business. You need to have separate entities. If you still hold real estate assets within that entity, you do not want to mix or commingle your assets from the trucking company within that. It can create some legal issues. Again, I got to continually say I'm not an attorney, so I can't give you legal advice. You want to consult an attorney on what those issues are. But in terms of taxes, it can become problematic as well. And we want to make sure we are separating out the different aspects from a tax perspective of the different operations that you have.
He also wants to know if he can just get a different EIN number.
You can get an EIN. Yeah, you can just go out to the IRS website and get an EIN, but that we see that a lot as well, folks. So I've got my EIN right here. Well, usually when they do that, they're getting the EIN, which is just a tax. It's like a social security number. And usually they get that as a sole proprietorship, or they may even tell the IRS that it's an LLC, because when you go through that process on the IRS website, you tell the IRS what that entity is. Is it an LLC? Is it a sole proprietor? Is it a partnership? Is it a C Corp? And you can go through that and tell the IRS that, yeah, I've got an LLC. But if you don't actually have an LLC set up at the state level, you've done nothing for yourself. That EIN means nothing in terms of legal protections because you don't have an entity at the state level. So no, to answer his question, no, you need to go through the entire process of setting up a new LLC, get an EIN for that new LLC, as well as an operating agreement for that LLC. We do all of that. Those are the documents that we provide when we are doing LLC setups for folks.
Okay, so I think you just answered that right there. He needs to contact you guys and set up a totally separate LLC, it sounds like.
Yeah, that one right there. Can I start another LLC under my current LLC? These are, yeah, those are very good questions, but they are legal questions. There are ways that people do that, and there can be legal benefits to doing so, where you have kind of a holding company. You know, it may be that you want to set up a trust, and that trust has an LLC, and then the LLC of the trust holds the multiple different businesses that you are operating. Again, you want to get some legal advice on all of that. Talk to an attorney, make sure you're getting proper advice, because again, all the state laws are different. And so you need an attorney within your state to help you get those types of things set up.
Now, another great thing about this report is it does what you would expect. It gives you the advantages of forming an LLC, but it also lists the disadvantages of forming an LLC. Oftentimes, people will say all the advantages of something, but not tell you the disadvantages. And I don't know if you want to touch on that or not, but is there some disadvantages of forming an LLC that people might not be aware of?
Well, it usually comes down to a question of cost as being the disadvantage. It does become more costly. There are some disadvantages when it comes to setting up a partnership. There are membership rules, for example, with an S corporation that can limit some of the things you want to do. But I would say that generally speaking, our clients don't run into many of the disadvantages that can potentially come from these business entities and membership within these entities, just given the size and the scope of the business entities that and operations that we're talking about. So usually the one we run into, the disadvantage of it is the cost of actually setting it up. And those costs vary because every state has different fees. As an example, Florida, I think their state fee is $125 to set up an LLC. Utah is going to be $58. Ohio, $99. Then you get to places like Texas, it's going to be $307. Nevada, it's up over $700. And those are just the state fees, right? That doesn't include the fees that you're then going to pay someone like us to actually do the work. Our fee to do the work for you is $400. That's going to get that's going to include that's our service, and then we add to the top of that whatever the state fee might be. So for example, Texas, you're looking at $707 to get an LLC set up. Utah, you're looking at $458, and so on and so forth. So those costs can be problematic for folks from time to time. And what I would say is just start saving. It's something that can definitely benefit you down the road as you get into this and you start making more money. Or if you're already into it and making good money, you want that LLC because, again, it opens up a whole lot of options for us to then potentially be able to work with you on to lower your tax liability.
Okay, I'm going to skip some of this because we've kind of touched on it and I want to get back into the comments. It talks about sole proprietors and partnerships, and you've touched on those pretty good. And then it has a section about, is an S Corp right for my business? And you've touched on some of that, but ideally they need to call and speak with someone about their situation at your office. There's a lot of great people there that'll answer your questions. And we'll get into more of this in just a second. This is a question I've got as well as somebody that's getting ready to do an LLC. Uh, is there any disadvantages to having a business account at the same bank that your personal account is at?
No, I don't see any disadvantages to that. If anything, it just makes it easier for yourself to have that business account and personal account at the same place. I see a question here right now. Do I actually cut a check out of my business account, or can I just transfer the money? You can do either. Cut a check. I mean, you don't need to do it that way. That's the kind of the more cumbersome way to do it, more paperwork involved. You can just transfer the money from your business account to your personal account. That's what's called a distribution if you're an LLC, a distribution of funds. The way the taxes work on an LLC, let's say your LLC makes $100,000 for the year. That's your net income, okay? You can choose as an LLC, because it's a pass-through entity, you can choose to take all, some, or none of that $100,000 to yourself for personal expenses. If you don't need to take any of it, I guess you got other stuff going on the side and don't know why you're driving truck, I guess. But usually people need at least some of that money. As an LLC, you're going to pay tax on 100% of that money. Okay, you're going to pay income tax and self-employment tax on that $100,000. And so if you leave money in the business over the course of a year, so the December 31st date is usually the tax date, delineation date for people's taxes. If you have money that you have not distributed to yourself beyond that December 31st date, you can take it as a distribution the next year, and you're not paying taxes on that distribution because you already paid taxes on it or will pay taxes on it with your prior year tax return. So it can get a little bit difficult to understand, but just know we understand that. And the easiest way to handle it is, yeah, just transfer the money from the business bank account to your personal bank account. And absolutely, you need to separate the two. Do not be commingling your personal life with your business life in terms of the business expenses. It just makes it more difficult for you all the way around. You want to have one account for the business and one account for the personal.
So that's a question I had too. This may be a dumb question. Say you're paying yourself $1,000 a week and you had an unexpected expense come in where you needed more than 1,000 one week. Is it all right to give yourself a bonus that week out of the business account or something? Or how do you handle that?
Yeah, take it. You can do whatever you want with that money. It's your money, and you will pay taxes on it, regardless of whether you take it or not as a distribution. So if you've got an expense that comes up, just take the distribution, transfer it. When it comes to distributions for single member LLCs, we don't generally need to do much in the way of tracking those distributions. For partnerships, it's a much different story. We need to make sure that distributions are staying in line with the equity components of the partnership or the multi-member LLC. What I mean by that is if you're in a business venture, a partnership with somebody that's 50-50, and one of you takes a distribution that's greater than the other, well, now all of a sudden what are called your equity accounts are out of line, and you can't have that. You've got to keep those in line with themselves at the proper amounts of equity that you went into the business with. Otherwise, there can be some tax consequences for that. So, but yeah, generally speaking, just take the distribution. There's nothing that really needs to be done aside from just transferring it from one account to the other.
The next section talks about the importance of maintaining and reviewing prior tax returns. Um, I'm assuming you still need to keep those 7 years, right? You said logbooks was 3 years, but you'd want to have your returns at least 7 years.
So if you are filing your taxes timely, the recommendation is actually 3 years. But we like to tell people to keep them longer than that, just because stuff can come up, and a lot of times people aren't filing timely. And there are some differences in different types of paperwork. So generally speaking, if you keep them 7 years, you're not going to run into any issues. Then again, if you're one of these folks that have not filed your taxes and you get audited, there's a potential they could even go back further than the 7 years. Doesn't happen very often, but it can happen. So keep it at a minimum 3 years if you're a timely filer and are doing everything you're supposed to, and 7 years just to be 100% safe.
Does Trucker CFO keep the tax returns on file also, or the receipts, or do they not keep that information after they file?
So everything that is sent to us is digital in nature. Most of the documents we receive come across via email. There are some folks that will mail us, paper copies of stuff, and that stuff gets digitized. But for the most part, and what we prefer, our best practices for everything to come to us already digitized. And yes, we do keep all of that. It stays. We have a portal, a client access portal. In fact, you can see it right from our website. If you go to truckercfo.com, there is a customer portal login. And if you don't have a username and password, it's not going to do you anything. But within that portal are copies of all the reports that we've done. Any documents that have been sent to us are all out there and categorized by type. All the tax returns we've done for you are out there. Your estimated taxes, your quarterly estimated taxes, and those amounts are listed out there, along with any payments that you've made that we know about, that you've told us about, are going to be out there. If you use our fund account, which is essentially an escrow account to help you save for taxes, your balances and transactions are going to be listed out there. There's a lot of stuff in that client access portal that you're going to have. And yes, we maintain all of those digital copies. Now, when it comes to digital copies, the IRS, when they audit you, is not going to come and say, hey, show me all your digital copies of receipts. They're going to come and say, show me the actual receipt. Okay, so you've got to keep the actual paperwork, the actual receipt. Now, oftentimes, especially with these heat sensitive receipts, they're going to fade and be not be legible. That's okay, keep it, right? You can then show the IRS representative that's working on your audit, here's the receipt, we can't read it, but I've got a legible copy stored electronically. And so that's what you want to do.
That's really great advice. I was just about to mention, don't put your love's receipt on the dash. It'll be a plain white piece of paper in a couple of days.
Yeah.
Let's see. Here's a
real quick. I just want to touch on fuel. For folks that are using a fuel card and are getting a fuel discount, the receipt that you get at the pump is not the receipt that you get to use for tax purposes, because you got a discount. And so there's no reason for you to keep the fuel receipt, the pump receipt. We're going to use instead as your backup your fuel report from the fuel card, or whatever other means you might be getting the fuel reported to you. It might be settlement, it might be otherwise.
Yeah, I get an email on mine, and that's what I forward over, is that email that shows it's a receipt inside of an email. Let's see here. It's pretty extensive on bookkeeping and things like that. I'd really encourage you guys to go in there and download that report. It's 41 pages and it's a good read. Do y'all put that report out every year, like every January? Do you have an updated one, or is this new?
Yeah, well, so the PDF in this format is actually new this year. All of the content in it has been put together and released in one form or another through our website and to our clients over the years. This is the first year we've compiled it into one place. I should point out on the PDF, there are links to many of our podcasts that touch on the topic that you happen to be reading at that point in time. So as an example, the value of properly handling your paperwork, we've got a podcast on that topic. You can click on that podcast right from the report we've put together, and it'll take you out to the podcast. I see Christian here asking, what's the best way to keep track of day-to-day expenses? Scanning receipts. I usually end up estimating expenses. Don't do that, Christian. Don't estimate your expenses. You're asking for trouble. It's a pain. I get it. The better system you have in place, the better off you're going to be. But what I recommend to folks is that as they're out on the road, they have some kind of filing system in place that as they receive these receipts, they first are taking a picture of it and sending it to Trucker CFO. Do that at a minimum monthly. I might get slapped by some of my employees for hearing me say that. That's at a minimum. Okay. Ideally, you're doing it at least weekly, and really what we like to see you do it every single time you incur that expense. So you get the receipt, just get in the habit of taking the picture, emailing it to truckercfo.com. And there's an email address we have that you'll be given if you're a client to send those receipts. Just do it that way. And then just have a filing system in place on the truck that you just put them into a folder. And then when you get home, take those receipts out of the truck, put them into your home storage, and start over for the next trip that you go out on.
So the next section I wanted to talk about is it talks pretty extensively about audits. And for independent contractors and owner operators, it says that about 2.3% of them will get audited. Did I read that correctly?
Yeah, 2.3% will be audited. It's been less than that over the last 3 to 4 years. COVID definitely had a big hit on the IRS. But even before COVID, we were seeing declining rates of what we call compliance enforcement with the IRS. And so many of you are probably aware of the 80 plus, I think it's 85 plus $billion that the IRS received as part of the Inflation Reduction Act. They're going to get that money over the course of 10 years. And it'll probably continue after that, more than likely, because they don't usually take money away from these agencies. But with the IRS, they've got that money and they are hiring IRS agents. They've already hired over 6,000 IRS agents just in the last little bit. Most of those agents currently are going to help answer the phones because it has been near impossible to get through to the IRS. But there are many of them that are also being put into audits and compliance type positions. We are seeing more audits come into our office, and we're seeing more audits come into our office related to non-filers. I think I saw a comment earlier on in the show where somebody said, "I just don't file. I'll make them take it in blood," or something along those lines. You may regret that approach. It will not be fun for you, and if you do that too long, we have stories. We know of people that have taken that approach and have ended up in jail. It's not very often that you're going to end up in jail with the IRS, but it can happen. And if that's the approach you take, it may be you that ends up in jail. So make sure that you're filing your taxes. If you have not filed taxes, there is what the IRS calls a substitute for return. What that means is they take the information that they have. And so in the case of a Swift driver, they're going to have a 1099 on file of, say, $220,000. We know you didn't make $220,000, but the IRS doesn't know that you didn't make $220,000. And if you don't file your tax return, they're going to take that $220,000 1099 and they're going to apply a tax to it. And so you're going to get a letter in the mail saying, "Hey, you owe us $60,000 plus interest and penalties." And that can become pretty scary for folks. So they're doing more of those. If you have not filed your taxes, you need to get with us before you start seeing those types of letters from the IRS, because it can become more expensive for you to do it if you do wait, because they apply deadlines to those and you got to get them done quicker.
Here's another one. Is there any deductions for a company driver running regional?
All right, so for company drivers, back in 2017 with the Trump tax cuts, there were changes to the way company drivers file their taxes. There were changes to the way all people file their taxes. The result for company drivers was they did away with what are called unreimbursed employee expenses. Okay, it was on a form 2106, and that is where company drivers used to claim their per diem deduction. And there could be potentially other types of deductions that you could take, such as like a cell phone expense. It was reasonable to expect that as a truck driver, even if you were a company driver, that you needed a means of communication when you were out on the road. And if you weren't being reimbursed for that, you could claim it. You used to be able to claim it as a deduction. Well, now they've done away with unreimbursed employee expenses. And so there is no way for a company driver to deduct certain expenses such as those, and there's no way to deduct the per diem on your taxes anymore. The offset to that was that they increased what's called the standard deduction. For a lot of people, it just didn't make up the difference. They lost more by not being able to claim those deductions than what they received by the increased standard deduction. And so, especially for like married team drivers, there was a pretty significant increase in the amount of tax they owed because of that tax cut or tax change that happened back in 2017. So to answer his question, no, there's really not. You've just got your W-2. You might, as a company driver, have a motor carrier that offers some kind of a per diem plan. And so what they do there is they will split. Let's say that in total, as a company driver, you're going to make $80,000. What they'll do is they'll take that 80,000 and they will allocate, say, 20,000 or 15,000 of it to untaxed per diem reimbursement. So you'll have a line item on your W-2 related to per diem for, say, $15,000, and that amount is not subject to income tax. But the rest of your 80,000 that shows up as taxable wages is subject to income tax. Some of the things that we're seeing there is that folks are used to having made a certain amount of money and have that amount show up on their W-2, and so they go and file taxes. And it used to be that they would show, say, $80,000 of income. And when that comes to like buying a house or getting a loan on a car, that's important because the lenders are using that amount on your W-2 and your tax return to qualify you for the loan that you're trying to get. And so now you're making the same exact amount of money, but your W-2 and your tax return shows a smaller amount of money. And so when it comes to getting that loan, you're not going to have enough money to potentially qualify for those loans. And so what we recommend is if you're in that situation and you just don't have enough income based on what is being paid to you as taxable income, and you're looking to buy a house or do other things, you might want to opt out of that per diem program that the motor carrier offers if they allow you to, so that you show a higher level of income to qualify for that loan.
That brings up a great question I've been meaning to ask you. In an S corp situation, you talked about paying yourself a reasonable wage, and a lot of guys are lowballing it at $35,000 or $40,000. Is there any disadvantages to paying yourself a good salary, say $1,500 or $1,800 a week, so that you do still qualify for house loans and credit cards and things like that? Does it hurt you from a tax standpoint?
It does. Yeah, it does hurt you. We want to make, from a tax perspective, and there are other considerations. That's why I say it that way. Our consideration as the tax preparers, as your consultants, are to try and minimize your tax liability. And so we want you paying a reasonable salary to yourself. You need to have reasonable compensation. And that is, there's no chart you can go to that says what reasonable compensation is. The best way to go about it is to say, what is the low end of what I could go get this same job for at another motor carrier. What's the low end of that? Don't factor in that it's an independent contractor, or, lease purchase job. Don't factor in that you're doing other things like that. Just kind of the low end company truck driver. What are you going to make? And that's what we're going to recommend that you pay yourself. By paying yourself more than that, you are increasing the amount of your payroll taxes. So you're going to pay 15% in payroll taxes on every dollar above that minimum reasonable amount that you pay yourself. And so it's going to cost you that much money. So one of the questions that comes up is, well, I just can't live off of $45,000 or $50,000 a year. How can I pay myself that much? I need more. That's okay. You can always take a distribution from the company, from your business, just the same way you did when it was just an LLC and you had no payroll. You just take a distribution by transferring it from the business over to the personal account. And that's how you get the additional amount of money that you might need to live off of.
So in the situation like that, say that you gave yourself a $500 distribution one week, you would need to take payroll taxes out of that $500, right?
No. Let's clarify that. The distribution is completely separate from any payroll. So on the payroll services, we actually partner with ADP. We've got a relationship with them, and so we set our clients up with an ADP account, and we work with ADP. We get all of the tax reports and all of the wage reports, so that we can bring that in for the bookkeeping purposes. But then ADP is actually processing the payroll, and the taxes, the federal income tax, state income tax, and FICA, which is Social Security and Medicare, are taken out of that out of the amount you're going to pay yourself by ADP and sent to the IRS for you, and they file the quarterly or annual payroll reports that you need to have filed. That is a separate process from the distribution. On the distribution side, there is no withholding. There's nothing that needs to be sent to the IRS. However, we calculate the taxes of those amounts as part of the tax return, separate from any distribution that's taken.
Okay. And the next part, it talks about tax resolution issues for guys that have gotten trouble. What services do y'all offer for the guy? I think we had a guy asking about it earlier in the comments too, about if they're in trouble with the IRS.
Yeah, so if you are in trouble with the IRS currently, give us a call. If you've already got letters and they're sending those nasty grams, give us a call. I don't even care if you've already dropped $5,000 to Optima Tax, which is one of the national tax resolution firms. You see their commercials all the time, right? These are the firms, the commercials that say, do you owe $50,000 or more to the IRS? Well, give us a call and we'll resolve that issue for you. What they don't tell you, and this is not too far from the truth, is they're going to charge you an arm and a leg or close to $50,000 resolve that tax liability. So if you've already dropped money for a firm that does this, and it's a huge amount, give us a call. We're still going to save you money. I can almost guarantee it. Our fees are very reasonable on this type of work, and we do all of the tax resolution work. So when it comes to taxes, there are tax preparers and there are tax problem solvers. Those are kind of the two areas of tax work, generally speaking. And we do a lot of the tax resolution work. We've got a great page on our website. If you go to truckercfo.com, under the services tab, there is a section for tax problem resolution. And it'll walk you through a lot of information related to tax problems and what some of the options are. Generally speaking, we're going to be looking at an installment agreement. That means taking the amount that you owe the IRS, dividing it up over a certain amount of time, and it becomes a monthly payment for you. But there are circumstances where other situations might apply. We could be looking at things like currently not collectible. It's a status within the IRS where they just say, you know what, this person has enough stuff going on financially that they're not going to be able to afford to pay, but they might be able to pay in the future. So in the meantime, we're just going to put them in a not collectible status and we're not going to do anything about them, but we're going to check on them from time to time. Then there are things such as offers in compromise, where we have examples, and I say example because this is not everybody's situation. examples of people that have owed 80, 90, $100,000 or more, and we've got those tax debts settled for under $1,000.
Wow.
Now, generally, if you're able to qualify for that type of situation, it means you probably don't have much. You're under some real hardship. You don't have anything in terms of assets. You probably are out of work or not making a whole lot of money, and you don't have any cash on hand. You don't have any other assets that the IRS could potentially liquidate. And so there's just the IRS realizes we're just never going to get this money, and so we're going to settle it out for pennies on the dollar. Most of the time, especially for folks like that are going to be on this call, you're working, you're making decent money, you've got a decent living, and so the IRS looks at that and they say, well, you're making decent money, you just didn't pay your taxes. And so we're not going to let you settle. We're going to make you pay it, and you got to pay it over time. And then there's folks that are somewhere in between, right? Maybe you've taken a step down in life, whatever the events might be. You don't have what you used to have, and you're not making the money you used to make. And so you might qualify for an offer, but it's still going to be a fairly significant amount, but just not what you owed before. The marketing that you see out there on cable TV and the satellite radio and that, they make it appear as if everybody's going to qualify for that pennies on the dollar offer. And it's just not the way it is. There are very stringent rules that we walk through and take people through a process that determines if they're going to qualify for an offer like that, or if they're simply going to be setting up some type of a payment plan. And even within those payment plans, the IRS has different guidelines. If you owe over $50,000, you are going to be required to go through a process where we put together a financial statement on you in an IRS format that they will accept. If you owe under $50,000, but you owe more than $25,000, the IRS is going to require that an automatic debit come out of your bank account every single month for that payment, meaning they go and take the money from you each month. And then if it's under $25,000, you can opt for an automatic debit, but you're not required to. You can choose to send in the check each month if you've got that liability due. So once you get into an installment agreement, you've got to make sure you're not defaulting on those installment agreements. For one, you've got to make sure you pay it every single month. That should be the very first bill you pay, because if you don't, it's going to default the installment agreement, and all of those penalties, and interest associated with those penalties is going to accrue back to your account, and you're going to be back to square one, and perhaps worse.
There's a section on page 34 for those that are following along at home. No news isn't necessarily good news. So just because you haven't heard from the IRS yet doesn't mean they're not coming. And you probably need to start getting in touch with Trucker CFO and let them answer your questions and get you on a path to getting that taken care of.
Yeah, usually what happens, Todd, is when folks are here for the IRS for the first time, there's generally going to be a deadline associated with whatever it is that's going on. Okay. And so if you haven't filed your taxes for, I don't know, 2, 3, 4, 5 years, heck, we've had folks that haven't filed in over 15 years before. When that happens, you're going to be given a deadline to get things done. Well, it's not cheap to do 10 plus years of tax returns, right? We charge what we charge. And if you're doing 10 plus years, you're talking thousands of dollars to get your taxes done. And you've got to do it by a deadline. And now all of a sudden you're left having to come up with that money almost immediately to get the issue taken care of. If you've got these issues, if you're a non-filer, you might as well attack it now. Get with us. We'll potentially set up a plan with you to work on paying for those tax returns over time so that you get the issues resolved now over a period of time that you can afford, rather than getting stuck with needing to come up with it right now.
Somebody's asking, are 100% of truck lease payments deductible?
Yes, they are. Lease payments on the truck are 100% deductible. That's different than the way it works with a truck purchase. With a truck purchase, the principal on the payment of the truck is not deductible. The interest is. And then the way you get the rest of your deduction is through depreciation on that truck. So if you've got let's call it a $200,000 truck, and your payment is, I don't know, $2,500 a month. The interest on that, depending on where you're at in the loan, might be, $700 or so. You'll take that as an expense for that particular payment. And then the remaining amount you get is depreciation. And there are a lot of different options on depreciation, anywhere from accelerated depreciation, where you take the whole thing in 1 year. You've got different types of double declining, 150% declining balance depreciation, straight line. There's all kinds of different ways to depreciate out the truck. And we work on that particular issue with our clients as well.
So here's another good one. Do you have any recommendations for software or another avenue to keep up with the expenses that we send to you?
Yeah, sign up for our services. That we have the client access portal that you log into, and so as you send them to us, we're tracking that, and it gives you the reporting that you need on those expenses. In addition to that, to using that service with us, which is going to be a very good service for lease purchase operators, single truck operations. If any of you listening are small fleets, if you've got 2 or more trucks, if you're making over $250,000 a year gross, if you're an S corporation in that status, then we've got services that use QuickBooks. We become your QuickBooks Pro advisor, and we work with you through that product. It's generally a more complex operation once you start working with those types of numbers and with multiple trucks. And it provides full sets of financial statements, balance sheets, income statement, cash flow, the whole bit. If you're in that situation, that's something we can talk to you about. But the vast majority of our lease purchase, independent contractor, one truck owner operator clients that are driving under somebody else's authority, generally the service that you need is going to be our what we call our core or core plus tax package. That's going to include the bookkeeping. It's going to include your profit loss statements. It's going to include your estimated taxes and an annual tax return. And that's going to be sufficient for what you need in that situation.
Okay, the next section talks about what's your plan for tax season and beyond, and the importance of planning. And we've touched on that quite a bit. There's also a list of recommended podcasts. And if you guys hadn't checked those out, they're great to listen to while you're going down the road. You're going to get a lot of great information. And I would encourage y'all to check those out, as well as you said Tuesdays on the Nemo channel, right?
Tuesday on the Nemo channels, 9:30 Central is when we're usually on. I say usually, from time to time it'll change, but that's the regular spot is 9:30 Central. Also check out all of the information we have out on Trucker CFO. There's a wealth of information. A lot of it is coming from our podcasts, our blogs. You want to check out our social media accounts. You can connect to those through our website as well. We're always putting out information. That's I think probably the most important thing I could say about the information we're getting out is that the marketing we do is not going to be sales pitch type marketing. It's going to be information. We take the approach that if we're getting good information out to people on a regular basis, that they're going to see the value in that, and they'll want to check us out and sign up for our services. Keep that in mind, and then just the fact that we're going to treat you like a person. You're not just a number at Trucker CFO.
Yeah, Christian says he's signing up now. Thank you for the information.
Thanks,
And speaking of information, they've got a page on here near the back that I don't know if y'all can see it, but it shows some common deductions. And so that's something else you want to check out in that report. I'm going to scroll back through and make sure I didn't miss any questions. If there's something we didn't touch on, you guys get your questions in real quick. We're at the 1.5 hour mark. And so we're gonna start wrapping this up. If unless you guys have something that maybe I've missed that you want to talk about, make sure real quick. And like I said, if I didn't get your question, I didn't purposefully ignore it. Just repost it and we'll get into it right now. I know Kathleen answered a lot of questions as well and was real helpful in the comments tonight.
Kathleen is great. I don't know what I'd do without Kathleen.
Yeah, Jessica's great too. She's really helped me a lot. And the thing I like about her is she doesn't call me for silly things. ATBS would call me for silly things in the middle of the day. She calls with good questions and she's done her homework. I'll give you an example because a lot of people, if I don't give an example, they think I'm full of baloney. The other day, my settlement showed that I made one amount, but my actual direct deposit was like $800 more. Well, it was because Swift's payroll department had had a bug in their system, and she caught it. And so I was able to get with Swift, get a corrected settlement, and get it fixed. She was looking in there and she caught something that I might have missed that would have caused my numbers to be off by $800. And she caught it quick, like the day it come out before I'd even had a chance to look at it. And it was just a quick email, call me when you get a chance and we'll look at this. And that's something that would have never happened at ATBS. They're lucky if they put the correct information in my case. But she's really good at watching my back and catching those type of things. And she's been a great stress reliever for me. And I mean that. Let's see here. Uh, Somebody's asking, as a company driver, they didn't get one of their W-2s. And is there a different procedure if you're a company driver and you don't get your W-2?
First thing I would say is call up the motor carrier and let them know you didn't get it. What's happening more and more is these, and it's not just motor carriers, it's employers in general are moving to electronic distribution of these tax documents. And so they're sending them to your email address or sending a link that you can then access to get your W-2. And so if you're expecting to see it in the mail, depending on the employer, you may not have it in the mail. And so you won't see it. And so you've got to go back to your email and check that out. If you need the link again, call them up. If they just haven't issued the W-2s, that's a big deal. The IRS is going to be after that employer with issues of their own. And like I say, if ultimately you just can't get a W-2, the thing you want to do is go off of your last paycheck. And then it's not unlikely that in doing it that way, you might end up hearing from the IRS with a letter stating that there was something or other missed that they had that they need you to act on and correct. And that's okay. We can help you through those issues, but don't take the approach of just not reporting the income. That's going to cause bigger problems for yourself than you want. And so definitely get the income in there. And if there are things that need to be fixed after the fact that you just didn't have on your last paycheck, we can go through that process later on.
Here's a good one. The only reason I'm bringing it up is a lot of people don't know this. Tell Leasing, that does a lot of lease purchases for a lot of different companies, used to force people to get ATBS, and that's no longer a requirement. So uh, if you're in a Tell truck and you want Trucker CFO, you can now get them. That's now an option for you, according to Christian. Look into that, and I would encourage you guys too. Talk to your companies about getting set up with Trucker CFO to where you can get your Trucker CFO fees settlement deducted and things like that. Recommend them to your friends, and he's coming on the last Tuesday of every month. Have them get on here and ask their tax questions. Let's not rely on these truck stop accountants, as they called them in the deal. Let's get on here, and I think a lot of you are seeing that we're getting good information tonight, and that was the experience I got when I called in. So you guys check them out. We're getting ready to cut him loose. Let's do a couple more questions. He normally does about an hour, and we've held him way over, so I don't want to. He's probably tired and wanting to go home, eat dinner. Is a brand new truck always? Oh, that's a Swift question. We'll come back to that. I would say a brand new truck at any company is difficult to quit right now. Is there an advantage though? Let's go this way. Is there an advantage to getting a newer truck over an older truck in a lease purchase as far as taxes go? I know maintenance is a separate issue.
Well, so you bring it back to the tax question, and it always is going to come back to what is the true cost of ownership for that truck. You might get an older truck that has just been immaculately maintained, has no issues, and might end up running better than a new truck. And you've got a great situation there. Then again, you might get an older truck, 450,000 miles in a lease purchase, and the thing just sucks money out of you. You can't stay out on the road. You can't keep the thing running. It just is a nightmare for you. And then there's everything in between. And so it really is, every situation is different. And it's just one of those rolls of the dice that people have to decide on. Am I going to get a new truck, take a warranty on that truck and know that it's probably going to run good for me? Or am I going to buy an older truck that might have a warranty? Maybe the warranty covers everything, maybe it doesn't. But when that warranty expires, I'm going to be stuck with those repair bills. So there's really no straight answer on that question. I can't tell you overall. The tax impact of it's just going to come down to what that true cost ends up being.
All right. Well, we'll go ahead and wrap this up. I want to thank you for coming on and answering everybody's questions. And I guess we'll see you at the end of March. Thank you so much for coming in tonight.
All right. Thanks for having me, Todd. Again, people check us out at truckercfo.com. We're happy to work with you. Whether it doesn't matter the motor carrier, doesn't matter if you're on your own authority, doesn't matter if you're with TEL. Give us a call. We'll help you out. We're helping out a lot of folks out there right now with their taxes, and we'd love to help you out as well. Thanks for having me, Todd.
Yes, sir. Bye-bye. And I just realized that in the ticker, I don't have his information in there like I thought I did. So again, I'll go back and I'll put that in the description of the video. I believe it's in there now, and I'll also pin it to the comments as well. I'm not sure why it didn't put it in there this time, but I just noticed in the ticker that that it's not. Oh yeah, it is. There it is. It didn't show it a second ago. It is on there, the 800 number and the website. So it wouldn't be a Tuesday if we didn't have technical issues. But uh, yeah, thanks for coming in, Kathleen. I really appreciate you guys. Um, they really are the best. And like I said, what I'd like to see is people recommend them to your companies, that they get in contact with them, and let's see if we can get them to where they're able to be settlement deducted at some companies, uh, things like that, because good businesses like this need to thrive, and they're putting out a service that is greatly needed in the trucking industry. There was a time when ATBS was great, and I think now, in my opinion, that they kind of take their drivers for granted. And these guys, I never feel rushed when I call in. They answer my questions, and just like I gave the example of Jessica finding that $800 variance in my settlement, and it took me about 10 minutes to get it fixed with Swift, but it really was a benefit to me, and that's the kind of things that they offer that you won't ever see on a website or maybe even in a review. But they really have helped me a lot, and um, several of them there have gave me really good advice the past few weeks, and I'm acting on that, not as quickly as I should, but I am acting on it. Let's see here. What else have we got? When are you doing a get together? Yeah, a lot of people are wanting to meet me, and we're going to try to set that up at a terminal real soon. I'll go there and hang out a few days and meet some of you guys. A lot of you have ran into me at truck stops, and so we'll try to do something. I'd really like to do a truck show, and who knows, maybe one of the truck shows in the future I can make an appearance at and see a lot of you guys. But yeah, that's I was going to go to Greer and spend a few days out there, and you guys know, with all that's gone on, I decided to postpone that for now. The guy that was going to get the decals on his truck is holding off on that for right now, and so we may schedule that later. And then some friends of the show want to meet me out there as well. A really good friend of mine, that I say friend, we hadn't met in person. We've talked on the phone a lot. He lives about 30 or 40 miles from the terminal, and he's wanting to hang out. So I'm trying to get out there, trying to make it to some of these terminals. And it may be pretty soon, quite honestly. I'm headed to North Carolina Friday. I'll be out there this weekend. Weekend's not a good time to do an appearance at a terminal, but we may set that up here really soon, because I enjoy meeting you guys. I really do. It's a lot of fun. You're welcome in New Orleans at my house anytime. Love to get dinner one day. Yeah, next time I go through there, I'll do that. I also got another viewer slash friend of mine that lives in Slidell in that area. And so I'd like to get to the New Orleans area and meet up with you guys as well. But yeah, it's I know a lot of you had questions about the Volvo today, and I've been talking to Trucker CFO about that. We talked about doing a oh, what's it called? Where you depreciation. That's the word I'm looking for. We talked about depreciation, and I've been sending over all the registration and insurance fees and things like that. And they've been great and really helpful. This would have been a train wreck if I would have had to do it on my own. Um, and that's the key. I share what little knowledge I've got, but when I don't have the answers, I bring an expert in. And I had a guy today that offered me a lot of good advice for older Cummins engines regarding maintenance. And so that's what you want to have, is a network of people that you can go to, because none of us have all the answers. And I haven't been able to stump Trucker CFO yet, but I've thrown him some pretty good questions, and he's had all the answers so far. And so, if you guys got anything else, we're coming up on the 2 hour mark. I'm gonna wrap this up unless we got any more questions. Freight is really slow. Yeah, I touched on that at the beginning of the video before we bought Trucker CFO on. Fuel keeps going down, which is a good thing, but rates seem to be at best stagnant, and some guys are saying they're going down. And now, what's happening on contract rates, from what I'm hearing, is that a lot of companies are paying the penalty to get out of their contract freight because the spot market rates are so low. And so I did see some market analysts that are saying they're expecting it to pick up. Well, right here at the first part of March is what they're saying. Hopefully that happens, but I think the truth is nobody really knows, and so we need to do what we can, manage your cost, and run as efficient of a business as you can. And if you can make it in these tough times, then when things are prosperous again, you're really going to make good money. Business has always been competitive, and it's always survival of the fittest. So just keep running it as efficiently as you can. And I'm trying to get Cash is King on here because he runs the spot market and he's pretty successful. And we're trying to schedule that. Twisted D, we're also talking about doing some videos together. So I've got some collaborative things coming up, and you're going to want to make sure that you're subscribed so that you get notifications when those things come out. And we're also going to bring some other trucking companies on here and get their opinions and ask what they see and things like that. Get an oil purification system and an MD alignment. Yeah, that truck, um, definitely, if I decide to keep it, I'll make some investments like that. For me, I would be happy if I could get 12 months out of it, because in 12 months' time, I could save up enough money to upgrade to a better truck. But that part of the plan is still being formulated. And on the Thursday video, I'm going to give you some driving impressions and things like that. But it's uh, it's it's still a work in progress. We'll call it that way. It does need some little things. Russell says his truck is almost paid off, and I'm holding on. I would encourage you there, when it is paid off, don't start spending money like a drunken sailor. You're going to have mechanical issues, and be putting money back uh, as well, so that when breakdowns happen, because they're going to happen, that you're ready for that. Yeah, the CEO of Swift said that on Mother Trucker channel. Yeah, that's just good advice. You've got to some guys say, well, I can't run my truck for less than 250 or 275 a mile. Well, look and see if there's ways you can cut your expenses. I'm not a proponent of cheap freight, and there's a whole debate about what cheap freight actually is. But uh, the fact is, all businesses have to manage their costs. And I can even remember back to my fast food days when I was managing a fast food place. You had to you had a certain percentage of labor, and you had to have your cost for labor below that. So you sent people on breaks, or you sent people home, or in some cases, if you're shorthanded, you had to call people in. You had to run a leaner business in slow times. And even though you were managing, sometimes you had to get out there and work because the business just wasn't there to support having extra people there. And the same is true in trucking. You may have to take some loads you don't want to take. You may have to do some things you don't want to do just because of the market we're in right now. Oh, well, congratulations for coming on, man. I'm glad you're here. Thank you. I appreciate it. So far, it's been a nightmare. Uh, you guys know I picked it up in Illinois, and there's a whole story there. Maybe I need to do a video about this. But I got to the airport, and it was a flight from Lubbock to Dallas, and it was like 45 minutes or an hour late. Then I got in the plane, and they couldn't get the bridge that hooks to the airplane uh, to move, so they had to call maintenance out, and we were even later. And then I got to Dallas, and it looked like the O.J. Simpson Hertz commercial. I'm running across the airport, trying to catch my plane, and I get there just in the nick of time. There was just a few people behind me, and this guy behind me, he's got a bad knee, and he's cussing every time he moves and yelling. And it turns out he's the one sitting beside me on the plane. He stunk. He kept falling asleep and snoring and leaning on me, and I'd had to push him off of me. And anyway, I made it to Illinois, and they've got a scam going on there where people will pretend to be Uber drivers and try to get you in your car and rob you because you're not familiar with the area. And I finally got that guy to go away. And then two guys started fighting about football in front of me. So the guy that was supposed to pick me up at the airport, he got snowed in, and he said he was going to be about 3 to 4 hours late to get me. So I ended up taking an Uber ride from the airport to where the truck was. I got to the truck, and it's like 20 degrees. The Uber driver didn't turn the heat on, so it was freezing cold in the car. But then I get there, and the truck battery's dead. He had a battery maintainer on it, but the storage place had turned off the electricity, and the battery was dead on the truck. So I froze in 20-degree weather for about 20 or 30 minutes till he got there. And then I ended up spending the night at that guy's house, and he's a super nice guy. You guys have seen him in here, 38M, and had a great time. He helped me get temporary registration on the truck, and so it worked out. But it was definitely an adventure, and one of the worst plane flights I've ever had. Let's see what we got here. Then I got to Beto Junction, Kansas, and I slipped on black ice and hit my head, knocked myself out. And I'm lucky I didn't get run over in the Wendy's parking lot because it was dark out there. And, but yeah, I woke up, I was really groggy. I went inside the TA and I bought something to eat. I don't even remember what I bought. And I went in the driver's lounge and sat there for a little while. And then I took a different route back out to the truck. And I was afraid I might have a mild concussion. So I stayed awake and talked on the phone. And I ended up spending the night there. And I was glad I did because it's pretty icy out there. And I'd have probably had a wreck in that bobtail if I'd have kept going. But Russell says he's dropped 27K in repairs since last year, just paid 8,900 2 weeks ago. Yeah, and the question we always get asked is how much should you have saved for maintenance? And I always go back to you should save as much as you can because you just never know. Like you said, you just spent 8,900 2 weeks ago. Yeah, he says a year ago that fuel was 5.20 a gallon. Exactly, and I keep hearing guys on YouTube say fuel's going up. It's actually not going up. Now, you could argue other expenses have gone up, and but fuel is down right now, and I believe it's for political reasons. But uh, yeah, it's still real tough to make it right now, and there's a lot of people that's struggling. That's why I tell you guys, if anything I say in these videos sounds too good to be true, get it verified and make sure. And also, you guys give me a thumbs up if y'all hadn't done that yet. But yeah, verify everything I say. If anything I say sounds too good to be true. As a matter of fact, it was American Airlines. It was awful. There's an awesome podcast about alignment and trucking called Rolling Toe. Mike and Kevin Beckett, they write the book on tires and alignment. Yeah, a lot of people don't think about this, but the alignment of your truck and your trailer affects your fuel economy because if a vehicle is rolling what they call true, which is actual straight, it has less man, my tongue ain't working. It has less resistance than if it's rolling crooked. So again, a lot of your expenses can be cut by just doing good maintenance. I put about 20 cents a mile or 600 a week. Yeah, me too. That's what I currently put in my maintenance account. And I'm assuming dropping that much that you weren't on MRP. No, I almost was on MRP and I ended up doing a straight lease. And but it's you can make it on either one. Some of it there's actually three legs that you have to consider. One of them is the truck itself, and if you get a lemon, it's difficult to make it. The second one is the company. If they don't give you loads, it's hard to make it. And the third is your knowledge of trucking. And if you have those three things, you can pretty much make it anywhere. But if you're missing any one of those three things, it can be difficult. Now, the not having knowledge, you can overcome that by getting advice. And that's why we bring guys like Trucker CFO on because he's got the tax knowledge that I don't have. Diesel going for around 368 a gallon in Oklahoma. Yeah, you guys in the description below, check out the ES Advantage fuel card. There's huge discounts on there. And I've got a link in there. You can click on it. They'll ask you like 4 or 5 questions, and then they'll call you and go over everything with you. But you can get it regardless of your credit. And it has a lot of other perks and benefits. You can use it for maintenance. Um, at one truck stop, they give you unlimited drink refills and showers and 3 points per gallon of fuel purchased. And so there's a lot of advantages to it, and you really need to check it out. It also has a national tire discount on there if you need tires. The whole suspension should be serviced and bushings replaced. Also tire pressure. Yeah, in the winter, I run my tires at 110, and then the summer I run them at 105. And I agree with you. And that's one thing I liked about that Volvo. A lot of that work had already been done. Somebody spent a ton of money on that truck, and then it was at a shop and they couldn't pay for the repairs. And the shop sold the truck to the guy that I bought it from. So it really has had a lot of work done to it. But I check my tire pressures and my tires several times a week. It just takes a minute to do, and it beats sitting on the side of the road because of a breakdown. It said he's noticed diesel dropping 20 to 30 cents a week. He's seen it last week, 398 in Kansas. who's on your short list of who you would leave Swift? So if I was going to leave Swift, I would probably use that Volvo. I probably wouldn't do another lease purchase. It's nothing against lease purchases, but I've got another option now that I've already got a truck. Now, having said that, if I didn't have a truck, I would really have to do some research. It's something I hadn't looked into lately, but I would have to do some research and before I'd be comfortable giving a recommendation. But any lease purchase with any company right now, including Swift, uh, I would be saving money with the goal of either purchasing that lease purchase truck at the end of the lease or going out and buying your own like I've done. And so that's what I would say about that. Um, let's see. Super singles. I actually had a truck at Dart back in 2014 that had super singles, and I didn't mind them. They're a little squirrely on the snow and ice, and they're super expensive if you have to replace one. But me personally, I prefer to have duals back there, tandem. I mean, not tandems. You know what I mean? The dual tires. But I know it's kind of like automatic transmissions. People either love them or hate them, and I don't have a preference on that either. That well, I don't want to do driving impressions tonight, but I could take it or leave it on the automatic, drive a stick or drive automatic, and I prefer to have duals back there. But if I had a truck with super singles, it's okay. Yeah, I think I agree with you. I wouldn't touch a truck with super singles. No, the rims on my truck on my Freightliner, if I remember correctly, say they're good up to 130. Now you have to remember your tire temperatures are going to increase when you're going down the road, especially if you got a heavy load. Um, I used to run 100 and 105, and I increased it because the higher pressures uh, reduce rolling resistance is the reports I heard. At 110 in the winter, even if the temperature goes up a few degrees, it's not going to hurt nothing. And then in the summer, when I'm on the hotter roads, I reduce it to 105 and I'm okay there. And I'm checking it, several times a week. I'm not going to lie to you and tell you I check it every day, but 2 or 3 times a week I get out and check it. And right now I've got a tire that's leaking down, so I'm checking that one tire every single day. And so that's what I do. And I'd be curious to see what you guys do as well. But anyway, we're coming up on the 2 hour mark. So if you guys got anything else you want to talk about, throw it in there and we'll get it on. Uh, let's talk about this. Mike Beckett says run supers and overinflate them. You will get, well, yeah, you might, but here's the deal on that. If you hit a pothole with that tire, you're much more likely to get a knot in the tire. It's definitely going to be rougher riding. And so I don't dispute what he's saying. That's probably true, but I don't know what the pressures are for a super single right now. I'll be honest with you, 2014. This is 2023. It's been what, 8 years, 7, 8 years since I had those tires. I don't remember what pressures I ran back then, and there was a different train of thought back then. But look on the side of your tire for the manufacturer's recommended pressure, and then do 10 or 15 under that. Probably 10 pounds under should be good, and then monitor it after the tires heat up. But the higher pressure you can run will help your fuel economy, but it's also going to be a rougher ride, and there's a greater chance you'll damage that tire if you hit a pothole or something. Yeah, I like Michelin as well, but I'm okay with Bridgestone. I wouldn't do a Goodyear. 120, he says to run. Yeah, that's I don't as I said on super singles, it's been so long since I ran one. I don't have enough information there to dispute that. But anyway, I'm about to wrap this up. Is there anything else we need to cover tonight? Going to give it about another minute or two, and then I'm going to check out. I was supposed to leave today, and Texas gave me some issues getting the title transferred, and so I moved it till tomorrow, and there wasn't really any loads tomorrow for this area. So Friday morning's the first load I could get out of here, and I'll be headed to North Carolina, as I said. Thanks, 601, for coming in tonight. I'm sorry if I missed any of your questions, and I appreciate everybody being here tonight. I wasn't purposefully trying to ignore anyone, but I was trying to maximize our time with Trucker CFO, and we got 90 minutes out of him tonight. Join me on Thursday at 5 p.m. Central Time. That show is more formatted for me to answer you guys' questions and things like that. So I'll get your comments a lot better in that episode. When we have somebody on to interview them, I really like to focus on them and not make the show about me. Yeah, back at you, DJ. Thank you for coming in. I really appreciate y'all's time. Y'all could be doing something else, and I appreciate that y'all chose to spend it here with me tonight. Thanks, 601. Thanks, Christian. I know your stuff was really detailed. I hope he got you the answers you were looking for. Give him a call though, and hopefully he can get you set up the way you need to be set up to do what you're wanting to do. Yeah, but I don't think it's just Swift though. I think everywhere's been terrible lately. Having said that, I've been home for a week and actually 8 days now. I got home last Monday, and prior to that, I had a 3,000-mile week, and I was expecting to have a 3,000-mile week this week before I had to cancel today's load. And that wasn't Swift's fault, that was my fault. So yeah, it's definitely tough out there, and I'm not trying to discount that, but you just got to claw and scratch and get your miles. Bug them. The nail that sticks up the highest is going to get the loads. And don't be rude, but stay on them until you get something. Thank you very much, AC. I appreciate it. I had a lot of people making fun of me and things like that. And I never said it was a new truck. I never said that I was going to refurbish it and make it like brand new. But I've said, you can go way far back in my videos, I've said that a truck is a tool, and that's what it is. I'm going to use it to make money, maybe not right away, but at some point. And I'm not, even if that making money with it is selling it, I'm going to make money with that truck somehow. And by no means does this mean I'm quitting Swift. It doesn't mean I couldn't quit Swift today if I wanted to, but I like it here. I really do. And I'm going to keep doing what I'm doing. Do they frustrate me sometimes? Absolutely. Do I frustrate them sometimes? I guarantee you I do. So that's what I'll say about that. But I appreciate everybody coming in tonight. Well, thank you, AC. I appreciate you. Well, we're going to go ahead and cut this out. You guys join me on Thursday night at 5 p.m. Central, and we'll jump into it again. Christian says he loves the Swedes. All right, man. I do too, but if their trucks break, they're really expensive to fix. And so I need to go back to work and save up some money just in case. All right, guys. Have a great night. Thank y'all. Bye-bye.